What's going on, ladies and gentlemen? It's your boy Money Mirror here, and welcome back to another 100K Get Back video. Uh, Today is currently Sunday, market open. It's about 5 p.m. right now, and I'll start this video off just by giving you guys an update on the account. Once again, the whole purpose of this series I got going on, right? Because it's all the series. I believe this is like episode 6, which is crazy. And I could say that 6 episodes in, the account is it's constant and it's stable. Right now we're sitting at 97,000, and we have about 5% wiggle room before we hit our really about 6.5% wiggle room before we hit our daily or drawdown threshold, which is here. Basically meaning that if we hit this amount right here, then we lose the 100K challenge, and we lose the opportunity to have a funded account. So yeah, this is where the account is right now. I mean, it's been a little up and down. As y'all see, I started off with 100K. My first trade, I took a loss. On my first day, on Tuesday, I took a loss, bring it down to 97.6, 97.4, 95.7, all trading throughout the week. This was Wednesday. And then I ended up getting some recovery on it. I got it from 95.4 to 96.5. I got it all the way up to back to 100K, 100K.6, and I took some losses to close the day on Friday, which now has my account at 97.103. So this is where it is right now, and I mean, I'll say, reflecting on last week's trading, let's just dive straight into the charts real quick, because I'm sure y'all all know like what I'm looking at, right? So like last week was this right here. This was last week, which also led to like the bullish impulse we're seeing right now. All this was last week's price action. And long story short, I just struggled trading within these areas right here that you see. So that area right there, this is an area of consolidation. If you don't know what consolidation is, it's just basically sideways movement, and it's perfectly shown right there. And it just basically means that price does not know where it wants to go. And if you're a trader trading in consolidation, you can suffer a lot of losses, especially when you while I was trading within this consolidation. Long story short, I was taking trades, but my trades had really small stop losses. And my stop losses just kept getting hit within this consolidation, like I would try to buy at the support. See, I try to buy at the support, right? I'll be a buyer within this blue candle here, expecting price to go up from that blue candle, but then that red candle comes and wicks me out because of a short stop loss or whatever the case may be. But that week's done and over with, and quite frankly, the week ended with gold coming in some type of bullish rally. Gold is currently expecting to reach new higher highs, especially on this weekly time frame. So if you look at these weekly candles right here, we see that price was clearly making moves to the upside, creating higher highs and higher low points. And all the recent week just did was create a higher low point. Price made a higher low here. Price is climbing, making stairs, right? Higher highs and higher lows. And then all price did last week was confirm that this area right here was another stair or a higher low point, and its goal is to push price higher past these highs here, right? And this is essentially what gold is trying to do right now. And that's essentially kind of the direction and the way I'm going to be trading this week heading into gold. And one more thing I'll say about last week is that, coming out of last week, I really found out a really cool way to read market structure, right? Because, as you're taking losses in the market, right, you don't just take losses and you just take the loss and it is what it is, right? No. As you take these trades and you're taking losses on trades, you journal, you reflect, and you pick up on patterns that, you just pick up on indications. Okay, like I could have done this better here. I could have done that better there. Long story short, that all led to me finding out a new way to read market structure, and it's really nice. And I'm gonna kind of share it with you guys right now. So, long story short, we can just look at this area right here, right? So we all know basic market structure, right? We all know that buyers is higher highs and higher lows. Simple, right? And we all know sellers are lower lows and lower highs. Simple, right? Now, quick question. When price is in an uptrending market and price is sitting at a low, what is these buyers' main objective? Well, it's to break highs. So, okay, if price is in an uptrending market and we make a low, the fundamental principle is that price is going to make highs. So we should have all confidence to be buying at any type of lows formed within the market, right? Any type of higher low in a bullish trend, right? Stay with me. Stay with me, right? Because this is the logic. Price broke lows here. We're clearly in an uptrending market. Higher high, higher low. As soon as price finds its first higher low point, it doesn't matter what time frame you're on, because trust me, I was using this strategy or just reading market structure on the 1 minute time frame and it was working. So I know if it works on a 1 minute time frame, it works on all time frames. Whenever price forms that first higher low point, that's where the majority of your entry should be at. Your entry should be at that low point, right? Now look, don't forget to mark off your highs. Let's start new. Don't forget to mark off your highs. Please don't, because as you're a buyer when price is low or sitting at a higher low point, you want to know, okay, when should I be looking to take profit? Well, you're looking to take profit once price starts breaking above those highs. Now, say you're in a trade at a higher low point. Well, how do I know where to put my stop loss? Well, let's use the same logic we just applied. If price is sitting at a higher low point and we know that that is where the majority of buyers are at, then all you have to do is set your stop loss a tad bit below that higher low point. As long as price does not close below this wick or the lowest wick of that higher low point formed, you should hold your trade. Because what price is trying to do is to make a higher high. It's going to try to press higher. Now I know, oh, you're not no market reader, Ty. You already know what happened, right? That's cool. But just watch how he keep playing price, right? Mind you, this is the 1 hour time frame. Price is formed a higher high. So boom. Price forms a higher high. We know sellers are going to come. Boom. That's cool. We're still waiting for that support. Waiting for the support to be found. And mind you, this is the 1 hour time frame. So everything's a lot bigger. But all things apply on the same time frame. Or apply on all different time frames. Here goes our main higher low point or our main support. Meaning, if you are a 1 hour trader, or whatever the case may be, don't matter what time frame you're on, trust me, because this structure, this concept applies on all time frames. If I'm trading the 1 hour candles and I see that the support got formed here, I enter a buy there. If I put my stop loss, I'm putting it below this wick down here. My target is to see price go higher. Now, how much higher? It really depends on you. I found that while using this strategy, honestly, the best risk to it really works with 1-to-1 risk reward ratios, which is not the best, but it is pretty consistent and it is pretty profitable. You know, I took 4 trades and won all 4 trades trading this way. Let's say you're looking for a 1-to-1. Long story short, price came back down to the support, right? You're still in the market. Price did not break past the support. As long as price does not break past the original support, you're good to hold. Price broke highs. This is perfect. Now look, this trade would have gave you way more than a 1-to-1. It gave you a 2. It might have even gave you a 3-to-1 before a red candle closing up. But it gave you a decent reward, right? Same concept. Let's apply the same concept. We found the resistance. Cool. Let's grab a line. We know that this is the high. Now price is going to try to find a low. That first low we find is where buyers are at. So we're looking for a blue candle. Blue candle. You buy at the low. Buy at the low, bro. put your stop loss. Oh wait, that's a short position. Put your stop loss below the low, and you test the low. If it gets, oh, well, this is live price right now, right? But long story short, this is gold's current price right here, and we're anticipating that price respects the low. And more than anything, it breaks higher highs, right? And this could be shown on all literal time frames, bro. It doesn't matter. I can go on the 1 minute. Let me go on the 1 minute. I can go on the 1 minute and show you how fast this stuff works. Because this is really what I was trading on, right? So let's look at this short example right here. We know price is going up, higher highs, higher lows right here. This is clearly a bullish trending market. So price found highs right here. Boom. We're looking for the blue candle. Okay, this is a pretty drastic candle, but you see the same method applies. Higher high. Now we have a new higher high. Find the red candle. Boom. This is a higher low point you could have bought at. You could have bought at this blue candle right here. Felt confident that that support was going to sustain itself. Put a stop loss below there. Put highs above the highs. Take profit, right? Very simple. Mine's just the 1 minute time frame, so I'm going to be going really quick. Same concept though. We have a new high. The high is up here. This is where the two candles closed and met each other. Now we're looking for the first blue. The first blue was formed right here with this blue candle here. Now, yes, this is really choppy. And eventually price did break, which tells you that sellers did gain control because we gained lows, which is cool. So this is considered a break of structure. If structure breaks, okay, now we're changing biases. Now we're like, okay, now these are lows. And now we're going to look for a red candle, but you see we never got a red candle. All price did was break structure back to the upside again. And I know I'm talking fast, but I'm just trying to show you guys how simple it is. Now we're back in a bullish trend. Okay, we have highs up here. You buy at the first blue candle. You want to see price break the highs. Boom. Take profit. Now let's see a seller's example, right? Price broke structure right here. This is a break of structure with this support getting broken here. Once again, same thing. These are our highs up here. Or let's redo it. These are our lows right here. The lows were made by this red and blue candle. Then price came up. We're trying to sell at that first red candle, which is right here. You want to see price make lower lows and make lower lows. Same concept. Lower low down here. Now price made a lower low, lower high. We're selling at that first red candle. Price found a lower high point. It got respected 2 times, and price eventually did make a new lower low. And you could have took advantage of that and made a quick 1-to-1 risk reward ratio if you wanted. Or if you did your stop loss right, you would have made about a 2-to-1. But I hope y'all see the concept, because this is literally what I'm going to be doing this week, all this week, across all time frames. I don't care what time frame I'm trading. I'm doing this in real time with the current move right now. This is the logic right here. We have highs right here. So when price opens, price is going to try to break these highs up here. You could say these highs here, but there's enough volume up here, so I'll say those highs up there. Price found his first blue candle right here, so we can say this whole area right here is technically our support. And long story short, price is going to be trying to come up off of this support while respecting our lows down here and reach higher highs past this original high we saw. That is all I'm doing, guys. And I know the account is not flourishing and booming right now, but with this right here, I feel real good, especially coming off of last week, because I literally closed the week. Y'all saw how I made the account from 95K to 100K, and I took a couple more losses and got it back to where it is right now. Long story short, I did all that by trading this way and just seeing how it works. Like even in tight areas like this, to where if I draw out raw market structure, let's start from right here. We're drawing out raw market structure. And mind you, if you've been watching my videos, you know I just trade raw market structure primarily on the 5-minute time frame. But once again, it plays out on all time frames, okay? That was really the first blue candle right there, but you see the low was made and then it got respected right there. So long story short, low, higher high, higher low, you buy the blue candle. This is our true support right here that you would have had buys at. Mind you, the support never got broken because these candles respected it. Price ended up breaking highs right here. But then you see lows got broken right here with this red candle here. You would have thought sellers were coming. But then a higher high came. So when a higher high comes, looking for the next blue candle. That next blue candle did come in the form of a doji right here in the middle. So you could have entered right there, but just made sure your stop loss was below here. So give it about right there. Ended up getting respected. All the bullish volume came, broke the highs that you wanted to see get broken right here. And yeah, same concept, right? Even for a seller, price broke our lows right here. Price broke. You're looking for the next blue candle. You could sell at that next red candle, which is right here. Once again, we're selling in the bullish market, but the move still plays out. Listen, guys, this is all I'm doing. Trading is the most boring and simple thing in the world. And with this 100K account, guys, when I tell y'all I'm not rushing it, I am just really testing my discipline and my consistency and my patience and all this stuff. That's what I'm doing. And this strategy and the way that you guys have just seen me trade and read the market in terms of tracking the highs and the lows and seeing the highs get broken or the lows get respected is the way I'm trading. And I guarantee if you take some time and back test for yourself, you'll see the same thing. I'm not sure how long this video was, but hopefully it didn't take too much of your guys' time. I hope you guys did enjoy. Much peace and love and best of luck this week during the trading week. And I'll catch you guys on the next episode of the 100K Get Back. Peace.